Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the price action of BTC, what's been going on most recently and what I think is likely to happen next. Now as I get into the video, if you find it useful and informative, do smash that like button, I really do appreciate that. If you're new to the channel then why not go ahead and subscribe, you can always unsubscribe later. And if you haven't yet joined us in Discord, what are you waiting for? Check it out, link for that is in the description down below. It's a fantastic community talking crypto 24/7, it's completely free. And I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's waste no more time though. Let's jump right down into the desktop here and take a look at what's been going on with the most recent price action of BTC. So as we kind of get into this, let's take a look. Here we have Bitcoin paired up with USDT on the BitGet spot exchange on the 1 hour time frame. Okay, now following on from yesterday, there isn't terribly too much more kind of price action going on. It's kind of very much the same kind of concept that we're talking about yesterday, a very slow and boring weekend. However, I suspect that today's the day that we're probably going to see a little bit more volatility when it comes to the price action of BTC. Now, if we take a look at the chart here, so you can kind of see on this BitGet spot exchange, we kind of have ourselves coming up against resistance on the 50 EMA, which also happens to coincide with our equilibrium right here as well. Okay, if I make this a little bit bigger so you guys can see, we can have the 50 EMA, that's the red line here. We're coming up against this as resistance, and this also happens to be where equilibrium is as well, right? And so equilibrium is essentially a 50% level between our discount and our premium levels, and so we can see that we're right slap bang in the middle, right? And now price wants to react to equilibrium in the same way that it will want to react to the 50 EMA. So unless we can close above the 200 EMA, I suspect that this is all going to be rejection for us. Okay, so I expect that we're going to see a small move to the upside here. Okay, so I reckon we're going to probably break above this area briefly, and then we're going to get smacked back to the downside. I think our move is to the downside ultimately here, and there's a few things that we need to consider. We might just come up into the equilibrium just a tiny little bit more, and then move down. Let me show you another angle on this, right? So if we take a look at this without the smart money concepts and Elliott wave theory, we can also take a look at a trend line point of view, right? If we put a trend line across these levels, you can see here that this is the area of rejection. At the moment, the 50 EMA is rejecting us in the same way that it was previously over this side. We can quickly wick up and then move right the way back down. I suspect we're going to do something very similar here. Now, unless we can break above this trend line and above that 200 EMA, I suspect that we are likely to see some downward price pressure. Okay, so essentially, to keep it really simple, I expect that we are about to run out of momentum to the upside and we're about to shift down. Now, bringing it back to our BitGet spot exchange here, we can see that this is the likelihood scenario. Now, we already know that we are targeting down on the slightly lower range down here at 28,093 to 28,342. Okay, it's a part of a bigger three-wave pattern, as you can kind of see within the structure. Now, as a part of that, we have to consider that maybe there's a bit of a move to the upside to kind of stomp out some of those short positions first. Taking a look at everything that is going on here, I would say there is the potential to actually get rejected on that 200 EMA. Let me show you what that might look like. Okay, so if we grab all of this on the Fibonacci retracement tool, we push this up to here, you can see that we have this area. At the moment, we've come up to about 38.2%. It's not really where it needs to be from a three-wave pattern. I would suspect that we'd actually probably want to kind of wick into the 29,315. You'd also note that that would be basically below the 29,326 swing high of the B wave. And I would note that that would pretty much be where I would expect us to kind of come up to 29,315 on a one-to-one, but I don't suspect we'll go all that way. I reckon the 200 EMA would be too much resistance for us, and that's going to be around the 786 fib level. So I reckon that's probably where things are likely to get a turn. Now that would be under a three-wave pattern here, so a little bit further to the upside essentially. Something to this effect before getting rejected. Now, we obviously have to see how price reacts because there's no guarantee that this happens. The minimum expectation would be a double bottom, okay? Sorry, a double top, I should say. And that would actually put us significantly lower here. So our double top would put us at 29,150, right? And so if we were to think about the 21,950 or 29,150, I should say, that's actually going to be more realistic for a bearish kind of rejection on the equilibrium. Wick to there, stump on down. Got to bear in mind there would be a lot of stop losses all around this swing high here, specifically in the short position, because I do suspect that we have to move down today towards this level. But obviously, in order to kind of grab as much liquidity out of the market as possible, those stop losses are more than likely going to get wiped out, specifically if they're this close at 29,150. So yeah, I think that's kind of where that sits on this 1 hour time frame. I think essentially we'll look for a small move up and then we'll break on down. Minimum expectations 29,150. Slightly more aggressive on the upside would be 29,315. We'll see how that would play out later. But yeah, for the most part, that's kind of what we're looking for. We're looking for the C wave low down at the 28,000 to 28,350. Okay, that's going to be approximately where we're looking on the 1 hour time frame. Now, this is on the 𝗕𝗘𝗪 spot exchange, guys, and if you haven't yet signed up to 𝗕𝗘𝗪, what are you waiting for? Check it out. The affiliate link is in the description down below. Now, with 𝗕𝗘𝗪, it's a fantastic platform. It's a platform that I use it for 100% of my leverage trades and 90 to 95% of my spot trades. And essentially, if you do use the affiliate link in the description below, you'll be eligible for up to $8,000 in deposit returns and rewards and bonuses, depending on how much you deposit and trade on the platform. Above and beyond these things, though, during the bullish market, it's really quite difficult to make sure you log on to the exchange that you like using. Sometimes under such high load and demand of people trying to log on to sell their cryptocurrency in the bullish market, that maybe the exchange goes down and you can't get logged on, right? So it's always a great idea to have access to as many different exchanges as possible, right? And so personally, I use 𝗕𝗘𝗪 as my go-to exchange, and I have things like Binance, KuCoin, Gate.io, Coinbase as my backups, right? But it's always important to make sure that you have registered and you familiarize yourself with all the different exchanges, or as many exchanges as you possibly can, whether you are using them right now or whether you're going to use them in the future. Ultimately, getting yourself signed up, getting yourself familiar with the platform is going to do yourself a service in the future. Future you would thank you for it. Trust me on that one. So why not sign up to 𝗕𝗘𝗪? The affiliate link is in the description below. What have you got to lose? Make sure you have access to as many of these exchanges as you possibly can, and make sure that you're familiar with how to onboard an off-ramp fiat and crypto onto these platforms so that you can be ready for when the time does come. So yeah, let's move back over into our daily timeframes. Okay, so our daily timeframes for BTC, okay, this is paired up with USDT, and we can see that we did have this descending triangular wedge here, right? We broke to the upside out of here, but it's very, very brief. We find ourselves also testing this and turning this previous resistance into a support line, but we are below the 50 EMA at the moment. We have got the potential for a break to the upside, as I was saying the other day. I was still targeting out those slightly higher ranges, but I think it's going to take a little bit of time before we can get there. Now, if I zoom out of this, you can even see that we have the lower trend line here that's also kind of getting tested right now. So this looks like a position where we might be finding that support level. Again, that's going to be really coming in around that $28,500 level. And then we'll be looking forward at testing maybe the higher trend line. Now, essentially here with this, like everything else, higher highs and higher lows will have a tendency to want to break on down. So we are not going to be thinking to ourselves that, we're just going to be in this bullish market forever. At some point, we have to break that low trend line, and it's going to have to be a significant surge to the downside. 20K is the obvious choice because that is where a CME gap sits, but there's also fair value gaps sat down towards the $17,000 level. Okay, so we have to consider that at some point we are likely to see a break to the downside, and we are likely to see a lot of those gaps get filled out. I just do not think it's going to happen right now. I think that we're probably going to be testing this low trend line, and then we're likely to break to the upside. So as you can kind of see here, we've tested this quite a few times, and we're right now about to test it again. So I think over the next couple of days, we're going to get reversal in the market, and we're going to be climbing on upwards. And of course, 34 to 35,000, I think upwards towards $38,000 is probably where things will start to get really hairy and potentially start to see big reversals in the market, big crash with Bitcoin and a big crash with the altcoins as well. So new lower lows on the horizon for altcoins. I do suspect many will have their bear market lows on that next crash, and I do suspect that Bitcoin will pull back down quite nicely and pretty healthy correction at that as well. So for the most part, that's kind of where that sits. And you can also take a look at this on the weekly time frame. Where we can see that we connect all those highs and all those low points, that we have a pretty significant drop still potentially on the horizon here down towards $12,000 BTC. Something that I think would shock a lot of retail investors who have been FOMOing into the market. Something of which we can check by jumping down into membership.𝗕𝗘𝗪𝗀𝗪.io, which is our membership website. And on this website, guys, you can get a 7-day free trial for any of the plans that we have to offer. And there's quite a few of these on here. Let me just put this into dark mode. Makes it so much easier to see, in my opinion. And in here, what we can do is you can see all the different kind of benefits that we have available to offer, including what we call the mega pack, which basically has access to absolutely everything. And inside here, you have access to the data zone and the Bitcoin data. Now, if I load up the Bitcoin data just independently of this website for a second to make it a little bit more visible for you guys, we can obviously see all the kind of the metrics, the standard stuff. We have all the exchange-based data, the inflows, the outflows. We have the liquidations in the last 24 hours. They say $3 million in the last 24 hours. So really, really small liquidations on BTC, and the exchange with the most amount of liquidations. You can see it's long positions getting liquidated over the short positions and all that kind of stuff. And then we've got the wallet count data, right? The wallet count data breaks us down into 10 different buckets. We have 0.001 Bitcoin or more per wallet, all the way through to 1 million Bitcoin or more per wallet. Obviously, there are no holders of 1 million BTC or more, but there are holders of 100,000 Bitcoin or more, 4 of them in fact, and 10,000 Bitcoin or more, and 1,000 Bitcoin or more. And the reason that we look at this is it's important to understand how people are reacting. Are big, wealthy investors accumulating Bitcoin, or are they selling Bitcoin, right? Because it's always a buyer, there's always a seller. So when it comes to these things, it's important that we understand that, right? And so when we take a look at the whales at 1,000 BTC, we can see over the last 365 days, they're down 6.23%. We take a look at the Kraken size wallets, the 10,000 BTC or more, they're actually up in the last 365 days at 5.94%, but 180 days they're down at 6.96%, right? And they've been actually aggressively selling in 2023. And you can see here with the black line showing us moves to the downside as they exit and use liquidity from this most recent move to the upside from January through to now, the last 8 months or so, we've seen that these guys have just been aggressively selling, right? And so what's really important is that we then go, okay, well, what are the retail investors doing? Well, the retail investors are up 13.39%. In fact, they're always up because they're just buying every dip and they're buying every pump. And at the moment, this is not sustainable. This is not a good growth idea, because essentially what it's going to do is it's going to tell us that at some point, these guys are going to have to sell. They're going to succumb to selling pressure at some point in the future in order for the larger whales investors to come on in. If we want to see large investors coming in, someone's got to sell them Bitcoin, right? And those usually typically are the retail investor. So when we have a look at this data and we break it down, we can see across all the various different cycles, we've got all the data here, and we can break this down and you can see who's buying, who's selling, and all those kind of good things. Or we say buying or selling, but what we really mean is who is decreasing their wallet counts and who is increasing their wallet counts. We say selling, but it could be for many different reasons. Selling is the most probable though. So when we take a look at our chart here and we think, okay, well, it's not really being backed by big players. In fact, big players are actually selling in this move to the upside, then a break to the downside is highly likely. And that's going to basically bring in the new lows, because most of these larger wallets were selling at the bottom here. And that will essentially allow for these retail investors to panic sell and then get bought up by those larger investors again. It's a theory. Again, we'll see how that kind of plays out and all that kind of stuff. But following the money is quite an interesting one. We've had a very lackluster move to over the last few months here, very much losing momentum, not enough volume. We're very much a bearish situation where low demand and just a high supply. So not really much going on in the world of BTC at the moment. So guys, I think I'm going to leave the video right there. If you have found this useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done out of the way, guys, I hope everyone has a fantastic day, and I'll catch you all in the next one.